Welcome to TradeTheMBI.com. This is John. This report is for the 26th of April. And well, we had a little bit of more continuation downdraft, and then we caught a little bit of, I guess it was mid-afternoon buy that started to really propel things. Now, what we're looking at here is this rising gold that has had an impact, and then we ended up with the rising Azure, which usually helps support it. We were right around 38% when we got the beginning of the rising gold. And it started to turn over right about here, right at the 50%, and that's usually not all the greatest in the world. You ended up with the DOC steel going below and green below red all at the same time. That is pretty clear from our standpoint that while it's a short, it's not a dramatic one because we didn't have the big spike of orange like we had back over here when things were really overbought, and that's because we're just not overbought. That's the primary reason for that. Now we've had the dip below the red line. We get a little pop right here. Interesting, you get the steel moving above cyan right now in the pre-market setup, but you don't have green above red, and while that can change, you can see it's starting to tick up a little bit. We went to that sort of negative 20 range on a daily, which kind of creates a little bit of a bounce regardless, just sort of like a short cover, like take some gains. But defined for us clearly are the zones. In this particular case, that 38% is looming right there at 39 and a quarter, and below that clearly it's going to be more short going forward. All that dramatic? Not yet, because you've got the falling orange here, which tends to add to price, and it dips down, a little bit further. You're going to end up with the potential of another buy. Now that pivots back up, we're going to start to see a continuation drop down to the lows. This dip below the red line suggests that we're going to revisit these lows. So even if we do see a pop, we're going to be right back where we were. And from the NQ, it's almost identical, so which is good because that means that we've got parallel construction going on there between the markets. And that's exactly what we like to see. Euro's just at the bottom end of this range here, revisiting this dip below the red line, which happened right there. And now we filled that one back in. Still some positive extremes from back here in the 120. A break of the 120 is really going to get us back into the range. I don't know that they're really willing to do that just yet, but it's pretty hard not to see the signs that the U.S. economy is heating up, and bonds are telling you that, because as we head down to that 113 from these elevated areas, because yields are starting to show what everyone can see down the road is going to be that inflation based on, you got it, oil. This is why we talk about these very things every single day, because it gives us a broader picture as to what the expectations are. The suppression in gold, we talked about, some of that being related to the futures trading, ETF trading of it, that you're not really trading physical products in some cases, and that's had a dramatic impact. It's the same thing with Bitcoin. Bitcoin was on a straight trajectory to the heavens until the futures opened up and gave people an opportunity to counter trade it, and once that happened, then you've got opportunities to take advantage of misalignments, what the whole point of my algo readings are set up to do. They're to show when you get that unusual activity that indicates that other forces want to apply pressure, so to speak. So let's talk about this daily. In fact, I'm not going to zoom in because it's just easier to slide back across to where we began for the day. We ended up with some pretty clean short setups there. Ended up moving down. Now, don't get confused with the white candles for like the MBI signal and that. They're just part of the program and this adjustment test that I was doing to show that we've moved into a unique situation. In this case, it's a volatile move of the 13.5 above the steel moving above that level, which is the equivalent of it coming up underneath, which you kind of like from a bullish standpoint. However, it's more bullish when you have the cyan right here under 6 1/4, which is what we got, and that's what turned into these blue candles, which suggest a buy. And of course, we got a lot of weakness, but not really weakness as much as consolidation, as we saw dramatic. It took a while for the red to get up to the 13.5. That's what you need, is these breaks of the zones to really start propelling things. And as it continued, we moved into a gold trend and shake out above zero. And one last test right there, and then boom, it started to take off with all the positive shakeouts. So even if you wait for the positive shakeout, fine. But the early precursor let us know that the downturn was ending. And what I usually point to is we talked about the little snake maneuver here where you have orange rising, steel falling. You get the secondary one where you have falling green and rising cyan from a bearish standpoint. You can see it last all the way through there. And it sort of goes away when you get these crossovers, and that's where I marked the steel crossing cyan right here. Hey, that warns you, be ready for a change. And then we ended up with a pretty big split here of the orange falling, cyan rising, green had just crossed above red. That's the earliest buy signal you've got. Now we like to wait for that orange dip to finally go, but even then you can still, with the low right here, I mean, this makes for very easy setup. And what I like to refer to as just a low cost, in the sense that your exposure is just below the zero line, which is at 26.11. The close is at 13.75. I mean, we're talking about 2.5 points. Yeah, that's crazy to have that kind of a stop when you're talking about the volatility here that's going in it. But that just lets you know that at 3 points risk at this particular level, and you're looking for at least the 23% from down here. So you're looking for more than 3.5 points just for a general target, and more than produces that, even in the short term. And then it allows, and I'm always into multiple entries, so I'll do one, and if I get the soft signals, which is the rising orange and falling steel right here, and then you look for that dip down, which produces another set of buy configuration. You can keep doing that within this DOC setup over and over again. Well, and then the buy gets up into the peak zones, and of course you end up with the DOC spread that took place here. But the key with this one, and I talked about this before, is the difference between rising red versus the falling red. And you can see we've got a slow decline of the red. The reason it doesn't break down is you need that break into the lower zone of the, like in this case, when you're above zero, right below zero. I always love the ones where we come up with red, flattens out just before zero, and then falls, because those tend to be the most dramatic moves. And you can see again here, even within this short, I could put the same yellow line. In fact, I might as well just put it in there, where we cross, kind of like right here. It happened before, we came back into it again, boom. This is kind of warning, hey, you might be getting near the end. You still don't have green crossing, so you've got some time, and time runs out right here. And that pretty much ends up at being at about the same price. So depending on how tight you're traveling with your stops at that particular point, that becomes the cover setup. And then we moved across, and then same situation up here. We ended up with that orange rising and steel falling within the same configuration of having the cyan doing the same. Another little bearish run right there, but it turns around pretty quick for a nice little ride up. And then you can see it here. Now here is an interesting one, because we almost had the peak. It didn't quite reach 13.5, but you had red moving lower, green dips below it, and strong move of steel and orange going above. So again, another one of those precursor setups, but even stronger. And I know it's tough, because I've always said that below red, cyan below red is always a buy. Yes, it is, until it's not. And this kind of gives you those early indications so that you can see it. And then we see it right here. So that orange was above and broke right in here, which is another precursor for saying, hey, that setup is kind of like lost itself, because we called this the tongue. So if you have the orange here, steel there, and you have the little cyan rolling through here, sort of like the tongue sticking out of the mouth. In this particular case, the mouth closes and bites the tongue a little bit. That's saying, hey, you might be done with your short. Not over yet. I mean, there's still pretty good separation right there, but be prepared for a turnaround. Cross comes at the same time, steel crosses above cyan. You didn't quite have green above red. Probably you would have waited. What I did was I just covered more right there and then was prepared, because it was at the 50% line, so I just used that as my turnaround cursor. So not quite, taking that entry, but just, hey, move above and I'm in, and boy, it took off from there. And you can see cyan below red, that particular point. And this will get choppy right here towards the end. This happened in the just after hours setup where you ended up with this huge orange move with steel dropping. That was like the earliest precursor for suggesting, hey, we've got a short. But you didn't quite have green below red, but what you had was the turnover of red starting to go. Now, what can happen with these is, though, it can dip for just a little bit and then bounce right back and around. So you do have to, like, continue to follow something like that and look for the continuation move. And we can see here right now, it could be very close to ending here as the orange is coming down and cyan popping. If that cyan breaks above there, sort of like, that tongue-biting kind of construct that we just were talking about back before, and that would say, hey, maybe the dip has ended. And so what have you got here? You get this move from 50 to 100 and then back to the new 50. So virtually a 50% retrace, which we'll see, because look at that separation between green and red. That's a long way down. So this is just steel rising is bullish, and you get some orange falling there, which is providing some additional support. You're just not getting any help with the fact that red is about to break below the zero line. So, and that's literally how to read it. I mean, other than falling shakeout. Now, if that shakeout turns negative, then clearly we're expecting the fulfills of these positive extremes. We've got one right here, which is roughly the 50% line, which we're almost approaching right now, which is, what's that, 50%? 2640. And then there was this other red extreme, if we look at it from down here and follow it up, it was right where the algos took effect at the white candle. How convenient, what a surprise, right? And that would call us to 35.75, so right around 36. Or I would say the 38%. So that's what you would be looking at from a full target standpoint, getting down to the 36 if the readings hold up. Still a good spread on the breakdown that's sort of like right here. So you probably get a little more continuation with it, kind of the follow through. Could even be like what you'll get is like just a large wick candle and then it gets bought back up and everyone's like, oh, shock, it got bought back up. Who knew? Yeah, who knew? So there you have it. I like to break that down. I put this on the Skype chat. I was having trouble with getting that picture because this is just a beautiful way to be able to see the precursors that set up the turnaround so that you're able to, either capture as much as possible or recognize that, hey, even if I'm following the stop there, then I can use my Morganacci lines here as pivot zones to go around and see if you get the follow through with the reads, because sometimes you'll flip and the readings are started your direction and then they turn, and that happens sometimes in these muck zones like this where it just goes back and forth. Yeah, you don't know when it's going to completely break through, except for when we get these extreme moves where the orange pops above or the steel pops above or below those 13.5 areas. Those become key. But definitely, whenever I'm looking at buy setup and I see cyan move below that, and the number we usually refer to for it is negative 6.25. You look right here, it was negative 4.7, and then boom, by the time we got the white candle, it had dropped to 9. That's going to convert to the blue segment. The blue stayed for a while through that dip underneath, and work the code for this one because it should not show a red candle. That should just be, what'll happen is it'll just turn all green. You won't even see, you'll just see one trigger color candle change, just like we did for the MBI and the GAMs. You won't even see all the gold. You'll see a start of the candle of gold, and then it'll turn red to indicate that it's a negative move from there. So it just helps to identify the zones. That's what we're really doing with these colors right now that you're seeing. This will be part of, I'll send this one out with the indicators for next month, and we should have even further updates on functions and the 8-bar update, so continuing adding language to those each day. It's just been exciting to trade this market right now with its really perfect swings. It's been very clean, and now we know the algorithms are really activated because we're getting very solid signals and they're very consistent. So while everyone else is scared to death, we don't have to be. And that's nice. Has been that way for quite a while, but much better now that we're not seeing the intervention of the Fed as much in day-to-day market activity. As always, though, trade well, and we will. I'll keep putting up stuff on the Skype chat.